Hello, ladies and gentlemen, Greg Michalowski from ForexLive.com. This is the Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs from a technical perspective: the euro versus US dollar, dollar versus yen, sterling versus US dollar. To kickstart your day, give you a little bit more detail and what to expect going forward. So let's get started. Looking at the 4-hour chart, last week I focused on this red box right through here. Well over the last few weeks, actually, the price did move above that red box in trading last week. Where we tried right through here, moved up to 1.08885, and then rotated to the downside. On Friday, we had the U.S. jobs report, which sent the euro higher and the U.S. dollar lower. But we found resistance sellers near the 50% retracement and also near this swing area through here between 1.0899 and 1.09126. Buyers turned to sellers, and by the end of the week, we were trading back below the 100 bar moving average on the 4-hour chart, and also testing the 61.8% retracement, actually moving just a little bit below it into the close. That put us back within this red box through here. So it looked like things were going to be more neutral once again after the failure above that area on Thursday and Friday. But lo and behold, the polls this week for the president election had Harris leading in Iowa, which was very unusual, and that gapped the euro versus US dollar higher, and the low price right here came right against the high of this red box and right near the 200-day moving average. That 200-day comes in at 1.089 or 691, and I think the low came in at 692. So buyers came in against a 200-day moving average, pushed the price higher, and we went up and broke above the 50% retracement, but just stalled right near the high of this swing area. I'm going to take this all the stuff off here and kind of go back in time and look at this swing area through here up to 1.09126. It goes back, to this area right through here where we started to see support buyers and support buyers against it, and resistance sellers against it, and it continued up through here. So we moved right to the high of that and found willing sellers. We are currently back to below the 50% retracement, back below the 109 level at the low of that swing area. So it seems like the buyers have run out of a little bit of steam near the highs. We'll see how that all develops. We're going to need to get above the 1.09126 and stay above that level to have then traders then looking toward the 100-day moving average. That's a blue line in this chart, and this other swing area up through here up to 1.0949. So keep this area in mind with the 50% retracement as well. On the downside, now the 200-day moving average and the high of the red box remains the key support. We can't move back below that 200-day moving average back into this red box if the buyers are to be taken seriously. So be aware of that. Let's take a look at the dollar versus yen. Next, we'll look at the 4-hour chart here, and what we see in this pair is that the this area right through here between 151.75 and 151.937, that level actually goes back in time. If I take a look at this going back all the way through here, you can see how this area was a low through right here, and we bounced to the upside. We came back down to that level right through here, more modest bounce here before breaking below that level. So this area right through here was a key support. Also near that is the rising or slowly rising 100-day moving average at 151.556. and the low price that we saw in trading in the Asian session, and then more recently in the U.S. session has come back down toward that 200-day moving average and found willing buyers against that level. I'll zoom back in to sort of show you what the price action here. We moved just a little bit below the 200-day moving average, but could not sustain, and we're back above the level. As you can see, the last three tests of that moving average have now found support buyers near that 200-day moving average, increasing the level's importance today and going forward. We're going to need to get below that level in order to increase the bearish bias. If we can't, then the buyers still remain in control. We look toward the low price right here from earlier last week to get above at 152.40 to open the door for further upside potential here in the dollar versus yen. If you do break below the 100-day moving average, we still have a bunch of support targets to get to and through, including the 100 bar moving average on the 4-hour chart, the 50% retracement of the move down from the high, going back to I think it's July at 150.75, and then the 100-day moving average at 150.33.55. So all these levels become key targets on the downside to get to and through. First one is the 200-day moving average. Finally, let's take a look at the sterling versus US dollar. Again, we'll look at the 4-hour chart. And what we saw in trading last week was a move down midweek into support through here, swing area. Defined by a number of different swing lows and swing highs going back in time. You can see all the different levels right through here. When it was a support, it was a resistance before moving to the upside here. It came back to the low of that area, also below the 50% midpoint of the move up from the April low to the high price that we saw in September. So the sellers should have taken control below the 50%. They couldn't. We started to rebound back up. But we did find resistant sellers against a 100-day moving average in trading on Friday. In trading here today, the market did gap higher, and we did get above the 100-day moving average, but the price did stall against the 100 bar moving average on the 4-hour chart and the broken 38.2, right near the 130 level. So that 130 natural resistance level did its job at stalling resistance, and the price has since moved down. We're back below the 100-day moving average, keeping the bears, more in control. But on the downside, what you want to look for is this level right here at 1.2938. The level corresponds with a number of different swing levels, starting back here where we had support, and then we had resistance before moving to the downside. We moved above that resistance, and you moved to the upside right through here, and then came back down to this level. Fell below it, could not sustain momentum, and then reestablished support here before falling below it again in trading last week. Friday's volatility off of the jobs report traded above and below the level, but so far in trading here today, we are finding support near that 129.38 level. And as long as we stay above that level, the buyers still are in play, but we do need to get above the 100-day moving average and the 100-bar moving average and the 38.2% retracement on the top side and up and above the 130 level to increase the bullish bias going forward in the sterling versus US dollar. So there you have it. A look at the 3 of the major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.